I think we're all called to, maybe not get rich, but we're definitely called to places of significance. It is definitely a big step, but our kids are going to learn what it looks like to take big steps through the actions that we take.
Welcome to the MoneyFITMD show. I'm Dr. Latifat, the founder of MoneyFITMD.
We want to change the narrative
where women physicians use.
My job is to let you know that's going to be.
I have to surround myself with people that are doing crazy things. All right, guys, welcome to another episode with the MoneyFITMD podcast or YouTube or wherever you're listening to us from. I am excited about the guest that I have right now. And honestly, I kind of stopped our conversation short. I was like, let's just start recording because I asked him a question and I want y'all to hear the answer with me so that fresh from the horse's mouth, even though it's not a horse. But Jeff, I was asking you a question and I said, interest rates are high. So many people are like, well, we're going to wait for the numbers to come down. And as someone that does money lending for real estate, and we're going to go into more details about what exactly you do, are you bored right now because people are not buying real estate? You're about to start getting, I don't know, Medi-Cal equivalent. Are you bored with no clients because people are not buying homes right now?
No, that's a great question. And yeah, so to go deeper into my answer that I started earlier, I've been originating since 2008. Been a top 1% loan originator in the United States since 2018. I've been originating loans for short-term rental investors since 2020, and April of this year was our second biggest month that I've had in the history that I've been originating loans. So, yeah, we're busy. We've got a lot of investors, a lot of people. It's kind of twofold. One, people investing in real estate, or a lot of people investing in real estate, understand in different environments it brings different opportunities. So right now we've got more inventory than we've seen in a long time. We've got less buyers because they're scared by the interest rates. And what I'll say about interest rates is interest rates are temporary. The opportunity can also be temporary. So, what we saw when the interest rates were low, that the market was flooded with buyers, which led to, you were having to waive appraisal contingencies and approval contingencies and inspections and, just all the things as a buyer that, you really want to have in place just in case you want to exit the deal. But people couldn't do that because, it was so competitive. They were just so happy that their offer was being accepted and it was accepted way over list price. So in this environment, it's much more buyer friendly so people can make good decisions because they're not having to rush to it. And then with that, they're not having to make over list price offers. So we've seen real estate prices level off, in some cases come down a little bit. You're able to ask for concessions from the seller, so money to pay for your closing costs. You don't have to waive all of uh, the elements of the contract that keep you safe in the deal if something were to come up and you want to get out. So, it is a great time to buy. The other thing that I see is people aren't going to let things like interest rates or maybe the cash flow doesn't look good right now get in the way of the dream. They've got this dream, and wherever it started, could have been when they were a small child or last year, that they want that lake house. They want, that place near the ocean, that place their family can go and stay and create memories for a lifetime. And then, they want this asset that's going to appreciate. They want this cash flow. They want, the tax benefits that come along with the short-term rental properties. So they're not going to give up on that dream. Now, I will say with interest rates, we're seeing them come down. So, I made a move here recently to a credit union. And, credit unions are notorious for having the best rates. And it's true. But in this space, credit unions don't always operate in a way where they like to originate second homes, or they're equipped for it, or they only do it, in small areas. So I was able to find a credit union that I could operate in the major short-term rental markets, They love second homes. They love the product. So now I have access to credit union rates. So if anyone out there shopped rates, they've looked into rates, they've probably heard probably close to 8%, you're gonna have to pay 2 or 3 points. I'm here to tell you today, when I looked at pricing, we were at 6.75%. And of course, this is for a well qualified buyer. You have excellent credit. You fit in that box for debt to income ratio. But 6.75, no points on a 10% down second home occupancy loan. So the numbers are working better in that scenario than at 8%. You're going to have to pay 3 points. So basically 3% of the purchase price and fees for the rate lock. So it is getting better.
I mean, I am just quiet because you said many things that are music to my ears. And for those that are listening that may not know me, I I love real estate. It's a problem that I don't wanna solve. It's a problem. I love real estate. I love when people build wealth. I love when people have the ability to spend their life as they choose. And I truly believe that investing in real estate and short-term rentals, medium-term rentals, long-term rentals can be part of your play in investment. But I found that it's provided an opportunity for people to live their life and create a legacy, live a life they never imagined. And I'll give you an example of that. Like we do short term rentals, we're very specific about our market and very strategic. But one of our properties is a beachfront property. I never in my life imagined I would have a beachfront property. But every time I go stand on that balcony and stare out for 2 hours, my kids just let me sit down in peace because they know that mommy is in her happy spot. Like I'm living my best life at that moment that I never imagined possible. And the fact that I can do that with my income and be able to rent it out so that I don't have to pay the mortgage out of my pocket, that is like amazing to me. And of course, there is other benefits like the tax savings potentially and those other things. But you mentioned something earlier. You said interest rates are temporary and sometimes opportunities can be temporary. I want us to talk about that a little bit because I think that many times as physicians that are busy in the hospital, a lot of my audience, they like to wait for the tide to go away. They want to wait for things to get better, for everybody else to be say it's a good time now. And usually what ends up happening is we're already behind the curve. When everybody's saying it's a good time, is actually you're already late to it to the game. So tell us a little bit about that statement you made early on.
Yeah, and I'll say that with this, my big opportunity in the space back in 2020 was to educate people on the 10% down second home occupancy loan because some people had never heard about it. Some people had misinformation about it. Some people had old information about it. And and I have a big desire that it's just part of my DNA to want to educate people because I'm preaching to the choir here, but the more you're educated, the more opportunities created. And so with that education came the opportunity for people to say, "Oh gosh, this is within grasp. I can do that." Because a lot of people thought you had to put 20% down. It was an investment property. But no, it's 10%, and that's just a lot more feasible, tangible, comfortable for people to pursue that idea of having this place that, it's a dream. It's a dream come true. So, yeah, that interest rate, it's kind of a phrase that developed over the past couple of years. Date the rate, marry the house. We can buy this property, it's ours, but the interest rate, if it's high, we could refinance out of it, later to improve our position. So that's kind of the idea is, that interest rate is temporary. You can improve your situation typically to make that better, but the opportunity where there's not just a flood of buyers on the market is going to be short lived. Once those rates drop down, there's thousands of people doing the same thing, sitting on the bench, just waiting for someone like you said to say now's the time to buy. because interest rates are low. Well, everybody hears that, and what happens? We're back into the situations where you're having to do just ridiculous things to get into a deal. So, yeah, when you hear buyer's market, there's a lot that goes into that, and it's typically a good situation.
So you mentioned about credit, what's it called? Banks, whatever they call credit
Credit
unions.
unions, yeah.
Why are their rates typically lower than other kinds of financing? Are they getting their money from a different source? Can you talk to our audience a little bit about that?
Yeah, to an extent, that's the way that deals are funded. Some mortgage companies have to go out to another entity to get them to fund the deal because they don't have that kind of cash just sitting around, and then they turn around and sell the loan. But that money is expensive. It's expensive to do business that way. So typically, credit unions are going to fund the deal out of their own warehouse. But then, one of the common things about credit unions is they're considered not for profit. So it doesn't mean that they're not interested in making money. What it means is they don't have shareholders that they're having to, um, you know, pay back or, give dividends to. They're going to take those profits and invest it back into the credit union. So that comes with low rates, when it comes to mortgages, cars, really any consumer loans. So, yeah, you'll hear a lot of times people are shopping for rates. They want to go talk to the credit union because of lower rates, and that's really how they're able to achieve it.
I see. And the partnership that you've started recently with the credit union, is that across the country or do you have bad news for Californians?
Yeah, bad news for Californians, unfortunately. I won't go into detail there. It's just a little bit harder to do the mortgage business in California. There's a lot of hoops, obstacles that some mortgage companies would just rather not have to deal with. But yeah, we're in most major short-term rental markets. So we're not in every state right now, but that's growing on a biweekly or a weekly basis where we're adding states. So here by the end of the year, we'll be in 48 states, excluding California and New York. So,
Wow. Wow. Way to discriminate against us Californians and New Yorkers. I
well,
mean, I don't
yeah.
blame you though. California, I recently was at a city, a small town that I love here in California. It's called San Luis Obispo. It is one of my favorite places in the world. And when you go to a place like that, you're like, they're just trying to make you feel better about all the taxes you pay here.
Well, nice weather. Yeah, it comes with a cost, I guess.
So does that mean that if I am a lender, that I'm a buyer, I want to buy a property, I live in California, but the property is in a different state. Does that mean that as long as I am in California, you cannot, or it's the location of the property?
Yeah, it's based on the location of the property. So, yeah, we can't originate loans for properties in California, but we can help. Uh, they're called members now. I used to call them borrowers or clients, but with credit unions, they're members. I could help you buy a home in, North Carolina, Florida, Tennessee, Texas. Yeah, any of those other states than California.
I see. I see. Okay, that's good to know. And as someone that is helping with the money part across multiple states, are there any markets that you're seeing that are coming up that are interesting? You're like, why are people buying here? But you're seeing people buying in a specific location. I'm curious to hear.
Yeah, the popular areas will always be popular. The Smokies is, I think, the most visited place in the United States. So a lot of people still buying in the Smokies, 30A, the Panhandle of Florida. North Carolina has become very popular. But what I tell people is, where do you like to go? Where are you interested in? Because I bet you are no different than a whole lot of other families that are interested in staying in those areas. So it really comes down to, what I really like is an area that is going to be available and have things to do at least four or as close to four seasons as possible. So then you're, not on as big of a roller coaster. Some areas, you're going to have, like, we have a lake house in North Central Arkansas. So, of course, the summer months are super, super busy, but the weather doesn't get extremely cold. So, we've got the people that are riding uh, off road vehicles, they're, mountain biking, hiking, all the things that you can do outside if it's not too cold. So, yeah, that's what I tell people. Where do you like to go? Where are you interested in? Because then it becomes about, you know, other families are going to be interested as well, but then making the property great, making, it stand out in the crowd, which is not that hard. It's not as difficult as people think it is.
No, I agree with you. A couple of years ago, we wanted to buy in Lake Tahoe, but the prices were not smiling. They were not looking friendly. And one of the things that I remind people is figure out the goal for why you want to buy the property. Is this mostly something to enjoy or is this an investment property? And I believe you can have both. But the numbers did not make sense. And I, as a rule, I don't do liabilities. It's just something that I don't do. So we had to figure out a different market, and we found a property, not Tahoe, but somewhere in between there, that it's a not very popular area. It's exactly what you described. They get visits 4 seasons a year, and not an expensive property either. And we're just watching this property impress us every year. And we're like, this cute little, very unimpressive home, it's pulling its weight. But that is the value of having like that, what you're just talking about, having that local knowledge of where do I like to go? Where do I like to visit before you decide where you want to invest in a property?
Yeah, I'm a big believer in, and most of my clients that I work with are building portfolios of lifestyle assets. So, the idea is these are properties that you like to go enjoy. And when you are not there, someone else is paying the mortgage, like you said earlier. So, and if it's better than that, it's better than that. But, we can't just look at cash flow. It's important and it should be there, positive cash flow. But, like we talked about earlier, you've got this real estate asset that over the history of time has proven itself to be a wealth builder. It's going to grow in value over the time in time. It's not going to depreciate. It's going to appreciate. And then, you've got the tax benefits, and I'm not a CPA, so I'm not going to go in the specifics of that. But the difference between qualifying for taking advantage of those is much easier than it is for a long-term rental. So, if anyone that's listening today isn't aware of the differences, you really should, because that's one of the big draws to short-term rentals is you don't have to be a realtor to take advantage of those short-term rentals like you do a long-term rental. It's much harder to qualify for.
Absolutely. That's a short term rental tax loophole. And yes, if you don't know what that is, absolutely go Google it. I've talked about it and had guests on the podcast to talk about it. It's something that I think is of value, especially if you're a W 2 employee and there aren't too many other ways to like have decrease your tax liability, for lack of a better term. And that is one of the draws that people have towards a short-term rental. The 10% that you mentioned in terms of 10% down, is that only for the short-term rental space or any kind of investment that you're trying to do in terms of real estate?
Yeah, and that's a great question, and that's one of the big areas I've been able to educate people. So it's very easy to qualify for the occupancy requirements of the second home, the 10% down second home occupancy loan. So it's really your intention has to be that you're going to occupy that property at some point during that first year. There's no minimum, there's no restrictions. It just, the bottom line is you can't put yourself in a position where if you wanted to occupy it, you couldn't because you put a tenant in that property. Now, the nice thing about it is you're only committed to that occupancy requirement for 1 year. So after that first year, if you wanted to do some midterm rentals where there was a contract in place or you wanted to do a long term rental, you're free to do whatever you want to after the first year.
That's good to know. And is there a limit on the number of properties that you can do that for?
That's another great question because I get that all the time. I've already got a second home. I already use a second home occupancy loan. I know I can't use it again. And that, I understand that thinking, but I like to put it in terms of think of someone who is ultra wealthy and you hear the stories of they've got the house here and then they go here, they go to the mountain skiing. That's for everybody because you can actually use that 10% down second home occupancy loan, of course, as long as you qualify up to 10 times because that's the amount of mortgages that Fannie Mae and Freddie Mac allow you to have in place under your name.
And the 10 is for an individual, not per couple. Is that correct?
That's correct. Yep. Yep. So we'll have dual high income earners that will operate under a strategy where we'll do one in their name and then we'll do the next one in the spouse's name. So, yeah, it's a way to scale bigger than the 10.
I love it. I love it. I love it. Any other sort of recurring questions that you get from clients or some of the top mistakes or misconceptions that you're seeing, especially with your physician clients or business clients that you're seeing when it comes to taking advantage of some of the opportunities, even now in 2025, when quote unquote, it's not a good market because of interest rates?
Yeah, a lot of what I see is based on conversations that they've had with other loan officers because the typical loan officer, the bulk of their business, if not all of their business, is going to be helping people buy a primary residence. So they're more uh, educated and in tune with the rules around primary residences and really are not aware of the second home occupancy loan. Maybe they do one every once in a while. So with that, you'll find loan officers who've been originating for a long time that aren't even aware of the current policy. So about 6 or 7 years ago, Fannie Mae, Freddie Mac changed their policy to make it more friendly towards people that were using these properties as short-term rentals. So it used to be the way that the policy was written. If you were renting it out on a short-term basis, it was really kind of a gray area if you were operating as a short-term rental. Fannie and Freddie said, "Okay, we know what people are doing with these properties. Let's go ahead and make the policy so people don't feel like they're committing mortgage fraud." So it's very wide open, it's very loose, but not every loan officer is aware of the policy or kind of the intricacies of the product. So one of the old policies that I hear come up all the time is it's got to be 50 miles from my primary residence or any other real estate that I own. There is no mileage requirement. It just has to make sense. So, like we have, I'll have physician clients that will live in the suburbs. They want to buy something in the city. So, if they're on call or if there's, bad weather forecasted, they need a place to go and stay. So they're close to the hospital or their office. And it's only, 25 miles from their home. No big deal. We can do the 10% down second home occupancy on that. So that's another one, the 50 miles. The other one that I get all the time is I talked to a loan officer, told them what I was doing, uh, and they told me I had to buy or use the investment property loan and put 20% down. And I'll ask, tell me a little bit how that conversation went. And they say, well, I just told them I wanted to buy an investment property. Well, as soon as a loan officer hears that, they're going to go down that lane. But if they would have just asked a couple of questions like, you live in Sacramento, you're interested in buying this property in North Carolina in a destination type area, is that like a vacation home? That question right there would lead to that 10% down second home occupancy loan. So I get that all the time, even with, short-term rentals becoming as popular as they are.
I love it. Thanks for sharing that because, again, it's important to know who your team members are. And I think that's something that most people don't think about. Even when you're trying to buy a property, are you using a regular agent or are you looking like an investor agent? Like those things do matter. When we were looking for our first investment property locally, our agent was not an investor, sort of like an investor agent, but he was willing to learn, and we had experience out of state, so we're able to help him learn the terminologies, the mindset, what you're looking for. And the same seems true for lenders as well, making sure that whoever you're talking to is experienced with working with investors. because it's not just about what the rates or access is, but also the timing, how quickly the work on your paperwork does matter. Is that correct?
Yeah, absolutely. The timing, the experience in operating in different markets, um, being in tune with what can be on a contract, what can't be on a contract. So, if you have someone that's not experienced, they get a contract and it says that bookings are going to convey, that could kill a deal because it gets to underwriting. They don't know any better. They're going to say, "Well, this is an investment property. They're taking on renters." Well, we've had the experience. We've taken that to Fannie Mae, and they've said, "No, as long as you can verify that those are short-term rental bookings, it's not a problem." Furniture conveying, because typically these properties are gonna be bought with all the furniture in them, these vacation homes. So that's another common, uh, issue that you run into. But yeah, I probably 4 years ago, I identified that same thing. You don't wanna just talk to a realtor that is licensed in that state or they do business in that area, so I put a list of questions together, interview questions for realtors, and really it was, not only from the lender's perspective, but my own buying experience, bad buying experience, to, really make sure that we are hitching ourselves with someone who is a short-term rental expert.
And is that a list of questions that you can share with our audience? We can share that.
Absolutely,
Okay.
absolutely.
We'll get the link and we'll make sure that it's in the show notes so you guys can get access to it. One more question that I had was 1031 exchanges. Is this a realm that you play in terms of if someone had a property and they wanted to do a 1031 exchange? As a lender, do you serve those sort of population as well?
Yeah, absolutely. We don't serve as the intermediary for that exchange, but it is an acceptable source of funds for down payment and closing costs on these vacation properties.
And one more fun question. And I don't even know if we want this question to be out there because we don't want a bunch of people like trying to close on a property quickly. What's the shortest amount of time that you've been able to help someone secure funding so that their closing actually happens? Because that's one of the scariest things for a buyer is it's like, I want to buy this property. We have a short time. I'm curious to hear your experience.
Well, I tell people, what's customary in most markets is a 30-day close, which is, even through the busiest times hasn't really changed. And then, I tell people we can close as fast as 21 days. And there's probably lenders that'll tell you we can close in 10 days, we can close you in 12 days. I don't encourage it. It'd have to be a really unique situation, a great opportunity, once in a lifetime deal. But there's just so much that goes on during the process from, the appraisal being ordered, inspections being done, just all the due diligence that you don't want to be rushed through that process. You don't want to be rushed because that's, when mistakes can happen. And, in most things in life, we'd rather be in that situation.
As you were saying that, it reminded me of someone that I read that actually lost money through a wire fraud. Yes. I'm just curious, what tips do you have, if any, and what have you suggested to people in terms of doing their best due diligence to avoid wire transfer for fraud, especially in that closing process?
Yeah, so all the funds go through the title company. So they're going to be your key player in making sure that all of that is done properly. So, yeah, just making sure that you've got a strong connection to the title company, that they're not just this far off entity that you never really connect with until you show up at the closing table. You want to verify all of the wiring instructions. You want to verify this title company. You may even want to look them up. Typically, the realtor, will guide you to the title company. So they're typically going to be a trusted source. But yeah, those stories happen. And yeah, that would be my recommendation is, the title company, your realtor knows the title company, and you've verified those wiring instructions.
Yeah, and one more that I've heard is just no new names in that process. So usually there's someone you've been communicating with before. If there's a new name, don't interact with the new name. Call the person that you had their email and their phone number when the conversation started 2 weeks ago or 3 weeks ago. But I know that that's one of the scary things that for physicians that are so busy, sometimes they're on call, trying to do the wire. Those are some of the things that can be very helpful. Any last minute words? This has been so helpful. Thank you very much for spending time with my people. Any last minute words that you want to leave our audience with?
No, I would say, something that we were talking about earlier when it comes to the short-term rental investment space is, it has that fun factor. And with our own personal story in investing, what we found with our kids, we have 4 kids. Because we went down that route of looking at long-term rentals, we looked at investing in the stock market, and yeah, I'm a big believer you shouldn't have your eggs in one basket, but what we did find is our kids got excited about it, and through that, we were able to model something that we've really tried to be intentional with, uh, which is, modeling to our kids, not just talking about doing things, but taking action in life and taking significant action because I think we're all called to, maybe not get rich, but we're definitely called to places of significance. So I'm, it is definitely a big step, but our kids are going to learn what it looks like to take big steps through the actions that we take.
I love it. Thank you so much. And if someone is trying to connect with you, they're buying a property, even if they live in California or New York, but they want to invest outside of those two states, how is the best way for them, or what is the best way for them to reach you?
Yeah, so the best way to connect with me is through my website, strhomefinancing.com. I've got a intro video that tells us a little bit about our family story, gather a little bit of information about what you're looking to do, and then there's 4 videos that walk through the 2 main products that we use in the space, the 10% down second home occupancy loan. We didn't get into it today, but the for the people that don't fit in that box, it's still possible through what's called a debt service coverage ratio loan where we don't even look at income. But and these are all 4-minute videos, so it's not going to take you hours to watch it. Literally takes you 20 minutes to watch all 4. But then just about the pre-approval process, what that looks like, and then the value that our team brings to the table. And then there's a button to schedule a call. So I love phone conversations. I love meeting people over the phone and talking about their hopes, their dreams, answering their questions. And really, our goal is to put people in a position to take action. So we want to be here as their expert. We want to be here to make them feel confident in what they're doing, but also educate people. Like I said earlier, more we're educated, the more we can do.
I love it. Thank you so very much. I appreciate your time, Jeff. And I know you have a busy schedule with some parties coming up and travels tomorrow. So we'll get you over to your family so they don't come here like find me in California.
Thanks. Thank you so much for the opportunity.
Absolutely. Thank you for your time. All right, everybody. I hope this has been helpful. Make sure you reach out. We'll make sure the links are in the show notes so you can get access to the free resource and also how to connect. But if this has been helpful for you, go ahead and just share with other people, especially women physicians. There's so much misinformation or lack of education. And one of our primary goals is to make sure we get real, accurate, and on time knowledge to those that need it. And when our physicians are better, we all are better as a community. So thank you very much for sharing this with those in your life. Thanks, everybody.